I'm Bill Neville. I'm Business Development Manager for Entrust, one of 4 business development managers that Entrust has. I handle a quarter of the country, covering primarily the Midwest and the Northwest. So we are doing just an all Q&A webinar today. So questions on any topic around self-directed IRAs, and I will hopefully be able to answer it. Just real quickly, some things that we always need to go through before we jump into the main part of it. Anything that I'm going to do today, I am not going to give you advice. We are administrators and custodians of self-directed retirement accounts. Self-directed means you make all your own investment decisions. We don't advise you. We don't help you find your investments. We don't sell you any investments. We purely provide all the administrative and custodial services for a retirement account that will allow you to invest in alternative assets. We always encourage you to discuss any investment plans that you want to make with an advisor, CPA, attorney, friends, family, whoever in your life is involved in those kind of decisions with you. We're going to just give a quick overview about Entrust. What exactly is a self-directed IRA for those who might not know? What are various investment options, which are significant, investment restrictions, which are a few. Some popular questions we typically get, so I'm going to answer some questions that we wrote ourselves. How you get started with an IRA, and then we'll get to the Q&A. Entrust has been in business since 1981. We hold over $3.2 billion in investor assets. And we are the business model of our company is that we provide our accounts a single point of contact. So I mentioned I'm a business development manager for a certain region of the country. If you open an account with us, then you will be the account for that specific business development manager and their assistant. So if you have any questions, need assistance, need any help, you will have my contact information, my email, my phone number, as well as my associate Jacob. Between the two of us, you always have a direct person to get a hold of. With the majority of our competitors, once you establish an account, if you need help or have a question, you'll call an 800 number and get put into the queue at client services, and then whoever happens to answer the phone will be the person to help you. And with Entrust, we do it a little bit differently. We give you a single point of contact. We focus on education. We are the leading educator in our industry. We're the only company that has a national continuing education program. We have one for realtors, for CPAs, and certified financial planners. We do those on a in-person basis, on an invitation basis. So if there's any realtors on here who want us to come in and do a 2-hour, 2-credit class on real estate IRAs, then reach out to us and we can look about arranging that. And we have the IRA Academy. It is it's a class that we give to a lot of our competitors in our industry that helps them pass the Certified IRA Service Professionals class. Again, we're the only company in our industry that does that. We are the education, very education-focused, more than pretty much any company in our industry. So what is a self-directed IRA? 2 things. You make all the investment decisions, and you can hold alternative assets. You can hold assets besides just stocks, bonds, mutual funds. So most people who have a retirement account with a brokerage firm. That brokerage firm typically limits you to only investing in publicly traded stocks, bonds, mutual funds. There's no rule that says they have to limit you. It's just a business model. The IRS allows you to invest in pretty much anything you want, but you have to have your account with a custodian. An IRA, by definition, needs to be held by a third-party custodian, and that custodian then determines what assets they're willing to hold inside the account. With Entrust, if the IRS allows it, then we are willing to hold it, as long as it doesn't violate any of the prohibited transactions and disqualified persons rules. So if you want to invest in things like real estate, precious metals, private placements, promissory notes, tax liens, trust deeds, Bitcoin, cattle, a bowling alley, an airplane, those are all investments that people have actually held inside the retirement account with Entrust. So in terms of investment options, I mean, that's just specifically there is pretty much real estate. The and more is the key, is that, again, you can invest in pretty much anything you want inside your retirement account. You're only really limited by your imagination and these 3 things. These are the only things you're not allowed to hold inside a retirement account: collectibles, life insurance, and S corporations. So collectibles specifically, work of art. So you can't own art inside an IRA, but you could own an art gallery if you wanted to. Alcoholic beverages, you can't own bottles of wine inside your retirement account, but you could own a winery inside your retirement account if you wanted to. Note there is a difference between collectible coins and metals and gems versus investment grade precious metals like gold, platinum, silver. The dealer will that you buy it from, if they're selling investment grade stuff that you can hold inside a retirement account, they will. You'll have the dealer that will do that, as opposed to someone who's selling coin collection type coins. So one's allowed in an IRA, one is not. So here are some typical questions that we get. How do I open a self-directed IRA, and what do I need to do to open an account? To establish an account with any financial institution, you need to pass what's called the Customer Identification Program. So you would fill out an account application, and in our case, a fee disclosure form, and we also need a copy of your government-issued photo ID. All financial institutions are going to require those things. Then when in opening your account, we're going to check and make sure that your name, address, Social Security number, and date of birth can all be verified. So we use LexisNexis to do that, and it comes back, and 98% of the time probably it comes back and it verifies them. The occasional 1 or 2% that it does not, then we just request a manual verification. So if it can't verify your name or your address, then we will request that you send some actual physical documentation, such as if it's an address, you send us a utility bill or a copy of a lease or something like that, verifying that that's your address. So to open a self-directed IRA, it's the same as opening a non-self-directed IRA with a regular custodian. You're going to have to go through those customer identification protocols that are required by all financial institutions, which is basically completing an application, and then that's going to get verified. With Entrust, you can either establish an account online through the portal, take you about 10 minutes, or you can fill out our form, send it back to us along with along with the copy of ID, and then we'll open the account for you. Either way, you're going to, if you're doing it through the portal, you need to upload your ID. What is the difference between a transfer and a rollover? That's a great question. A transfer occurs when you are moving money from one IRA to another IRA, or from one 401k to another 401k. So it's a movement between like accounts. The transfer is done by the receiving custodian requesting the transfer on behalf of your account. So if you are transferring money from an existing IRA to your Entrust account, you would fill out an Entrust transfer form, which we would then sign. You would fill it out, sign it, send it back to us, and then we would sign as well what's called a letter of acceptance. So for IRA to IRA transfers, the receiving custodian has to acknowledge that it's coming into an IRA by signing this letter of acceptance, which is baked into our transfer form. We will then send that transfer form to the other custodian, and then they will send the money to your account with us. A rollover is done when you're moving typically from either from a qualified plan, such as a 401k or 403b, 457b, maybe a pension plan, to an IRA. And the difference between a IRA to IRA transfer and a rollover is that on a rollover, you need to contact the custodian and initiate the rollover. And a rollover is technically a distribution to you in which you have 60 days to roll it over into a new account. You can do a direct rollover where they send the money directly to us, and so you don't have to worry about that 60-day time frame. But the fact remains is that for a rollover, since it's technically a distribution, receiving custodian can't request a rollover on your behalf. You need to contact the custodian. So again, IRA to IRA transfer, the receiving custodian, you fill out the receiving custodian's transfer form, and they then sign it. The receiving custodian signs it, sends it to your current custodian to request the transfer. Rollover, you initiate it. You can do an IRA to IRA rollover if there's some reason that you want to do that, but do note that the IRS only allows you to do one IRA to IRA rollover in a 365-day period, whereas you can do unlimited IRA to IRA transfers, and you can do unlimited 401k to IRA rollovers. Can I live in a property owned by my self-directed IRA? No, you may not. That is considered a prohibited transaction. A disqualified person is not allowed to ever live in a property that's owned by a self-directed IRA. So if your IRA owns a property You can't ever live in it. Your spouse can't ever live in it. Your ancestors, so parents, grandparents, etc., can't ever live in it, and your lineal descendants and their spouses can't ever live in it. So lineal descendants being children, grandchildren, etc., and then their spouses. So those are all considered disqualified persons. Not only can a disqualified person never stay in a property owned by an IRA, even for a night, but a disqualified person also cannot work on a property, can't do physical labor on a property, no sweat equity. So if you're a contractor and you want to redo your kitchen of a property that's owned by your IRA, you are not allowed to do that, nor is a business that you own allowed to do that. If you have a business that does that kind of work and you want to use your employees, that's not allowed. Can the income from an investment IRA flow back to me personally? Well, eventually it will flow back to you if you wanted to. The income from an investment in your IRA has to go back to the owner of the property, and the owner of the property is your IRA. So any income, any rent payments must get paid back directly to the IRA. From the IRA, you can then take a distribution. So if you have an investment inside your retirement account, the retirement account receives any dividend or revenue from the investment, and then from the retirement account, you can take the money out as a distribution and be subject to the taxes as necessary. Can your IRA borrow money to purchase the investment property? Yes. Your IRA can borrow money. There are financial institutions that will loan to your IRA through what is required to be a non-recourse loan. The definition of a non-recourse loan in this instance is that the only recourse the borrower has if you were to default is they can take the property. So when they draw up the loan documents, you can't put any personal guarantees. You can't use any other collateral. The only collateral allowed to be used on a loan to an IRA is the property itself under which you're borrowing the money. So that's the definition of a non-recourse loan. So there we go. There's a handful of questions answered. How do you go about getting started with Entrust? You open an account, which we have an online portal. If you can do that, go to the entrustgroup.com, click on Open an Account. Follow the steps. You'll have the account open in less than 10 minutes. Fund your account, transfer from an existing IRA, roll over from a 401k, 403b, 457b, some other type of plan, or make an annual contribution. And then finally, purchase your asset, which involves you instructing us to purchase the asset. So we have forms for that you would need to fill out and submit to us called a bidirectional letter, which you can also do that online through our portal, and then submit the investment documents. If it's a property, it would be the purchase contract in the name of the IRA as the buyer. If it's a private placement, it might be a subscription agreement with the name of the IRA as the buyer. If it's a promissory note, then you would have to submit the note with the borrower's signature and your IRA as the lender, right? So everything is done in the name of the IRA. The Entrust Group FBO, which stands for benefit of, the Entrust Group FBO, your name and account number. That's the name of your IRA, and that's what goes on any investment documents. And then we review and sign those documents on behalf of the IRA, and then we process the investment. Okay, let's get to the questions. And I'm going to leave that up there. So if you guys want to call or email me directly at some point, there's my contact information. Okay, first question. If my IRA invests in a rental property, to what extent may I personally be involved in fixing up the property and finding a tenant or a buyer? So I want to add a caveat before I answer this question that the Internal Revenue Code, and it's Section 4975 of the Internal Revenue Code that deals with what's prohibited, what's not prohibited, disqualified persons, et cetera, et cetera. It's not like everything in that code is completely black and white. We are ultimately just trying to interpret what the Internal Revenue Code says. So how I'm about to answer that is essentially our interpretation of what it says. Specifically what it says within that code is that a disqualified person can't stay in a property or can't do work on a property, right? So to what extent can you personally be involved in fixing up the property? Here's how I feel about that. It's your asset, right? You ultimately have the decision-making authority of what happens with the asset inside your account. So if you're going to be doing work on that property, if there's work that's going to be done on the property, you certainly have the authority to decide who you're going to hire to do the work and decide what work is going to be done. And if you're replacing cabinets, you can pick out the cabinets, and you can, tell the excuse me. you can, decide what contractor you're going to hire and instruct them what work needs to be done and oversee it, I guess, for lack of a better word. You're allowed to be responsible for your asset. What you're not allowed to do is you're not allowed to be doing the work yourself. You can't be swinging the hammer. You can't be, there pulling wire, whatever that needs to be done. You or any other disqualified person can't be doing that work. And then finding a tenant or buyer, again, I come back to, it's your asset. You decide who you're going to rent it out to. I think if you own an individual property, can you put an ad on, Craigslist or whatever to find a tenant and have them contact you and then go show them the property and complete the lease and all that stuff? Yes, I believe that you are allowed to do that. You're allowed to be responsible for your asset. There's no rule that says that you have to have a formal property manager to do all those things, right? But when it comes to if there's any cost associated with finding a tenant, for example, if you place an ad on some site that charges you, the account has to pay for that fee, right? So if you have to pay $10 or something to post an ad somewhere, you have to have the IRA pay that $10 fee, right? So we have to pay, the IRA has to pay any expenses. But in terms of actually choosing the tenant, showing them the property, talking to them, if you're going to run a background check, the account has to pay for that to run the background check. Those types of things, it's more about who has to pay for it. But I'm of the belief that you can actually do that. But in terms of fixing up a property, you can't do the work yourself, but you can certainly decide who you're going to have do the work and what work gets done. Next question, what are the issues I need to consider when buying real estate with my self-directed IRA? That's a pretty broad question, but what I would say the most pressing issue that you want to be concerned about is that you have enough money in your retirement account or have the ability to get more money into your retirement account to cover any possible expenses like maintenance, right? So if there's a possibility that you're going to need to replace the roof, the account is the entity that's going to have to pay for that repair, right? So you need to have either enough money in the account or with a retirement account with another custodian that you could transfer or roll over, or the ability to make a contribution, or the ability for your IRA to borrow the money, right? Have the understanding and be prepared for the idea that if you can't cover an expense, somebody's going to have to lend your IRA the money if you don't have any way of getting the money into the account. If you don't have a way of contributing it, if you don't have any more cash, available cash in another account, and you incur an expense, the account absolutely has to pay that expense. You can't pay it out of pocket. That's a prohibited transaction. So that would be the main thing that I think the issue is, just making sure that when you're buying a property that you're prepared for the idea that the retirement account has to cover any expenses associated with that. I am trying to decide if I should move my IRA and pension into a self-directed IRA. I just retired from my day job and need to do a lump sum rollover of my pension soon. That's not really a question. So I don't know how to help you. It really comes down to self-directed. It really comes down to, what do you want to invest in? What do you think is the investment that's going to best grow your retirement account? And if it's an asset that is, alternative, that's non-traditional, that's something other than publicly traded stocks, bonds, mutual funds, then you're going to need a self-directed IRA. But if you decide that you want to keep the money in the publicly traded stocks, bonds, mutual funds, then you don't need a self-directed IRA. So it really comes down to, how do you plan on growing your retirement account? How do you want to try and invest your money? As I go back to the beginning of this presentation, that's a conversation to have with an advisor, CPA, or just in general, people in your life that you trust their opinion about investments. And then, like I said, if it's a non-traditional asset, if it's something other than the publicly traded Wall Street assets, then you would need a self-directed IRA. Next question: did you receive my email yesterday from your name, Kevin Brody, regarding the use of an LLC with a self-directed IRA, blah, blah, blah? So, Kevin, I personally didn't receive an email, but, I have a certain region of the country, and so mine starts in Northern California and heads north and west. So if you're in a region of the country that email would have either gone forwarded to that. If you sent email directly to me, then I didn't receive it. But if you send it to like just the Entrust Group, it would have gotten forwarded to my counterpart, and you know, he may just not have gotten around, he or she just may not have gotten around to answering you yet. I'm trying to decide if I should move my IRA and pension. Oh wait, I already did that one. When converting from a SEP IRA to a Roth, is there any option that avoids the 5-year waiting period? No, there isn't. If you want to take a distribution on your earnings from a Roth IRA, you have to have had a Roth for at least 5 years and be over 59.5. And that's whether it's self-directed or not, right? Like that's just a general IRA rule. That's not specifically related to self-directed. That could be with a brokerage firm and you moved it from a SEP to a Roth with Fidelity or whoever. They're still going to apply the same 5-year rule. That's just that's a federal Internal Revenue Code thing. I currently have an advisor working through Entrust managing my account. I want to start managing the account myself. What do I need to do to implement this changeover? Well, I mean, we always take our instructions from the account holder themselves. So I mean, you're always sort of the manager of your account. If you've given a financial advisor either power of attorney, limited power of attorney over your account, or if you're name them as an interested party designation, which an interested party, by the way, has no ability to do anything with your account other than view it. But if you've given them the authority to do those types of things, particularly limited power of attorney, then we have a form where you can remove them as limited power of attorney. So you just have to let us know. But from a standpoint of it's always your account to decide what you want to do with it. So you know, you can just start telling the advisor you don't want them involved anymore, I think. But if you did name them specifically as a power of attorney, then you want to remove them as limited power of attorney. Next question, what are the tax implications, taxable versus tax deferred, on property income and gain on sale when a loan is used to partially fund a property purchase? All right, so I'm going to infer from that you're talking about whenever it's done inside a retirement account. So if your IRA borrowed money to make an investment, then your IRA may be subject to what's called unrelated debt financed income tax. You might also hear it as unrelated business income tax. And so depending upon how much you earned in that year and depending upon what the percentage of the loan balance is to the value of the property, there may be a certain percentage of that income that will be subject to UDFI, unrelated debt financed income tax. So to give you a quick scenario of how that might work, let's say you have a property that you bought and you have 50% leverage on it. So you own 50% of it through your IRA. The other 50% came via, well, you own 100% of it through the IRA, but 50% of that is for a loan that's outstanding. So 50% of the value of the property is currently leveraged. You earned $10,000 net income in a given year, in that year, when you own 50%. So 50% of that $10,000 or $5,000 is probably going to need to pay what's called unrelated debt financed income tax. So there will be a tax that's paid on the percentage of the net income, so after expense income, based on what the outstanding loan is. I always have a little trouble with my wording on how I want to explain this, but the fact remains is that if you're using leverage, then your IRA may be subject to the income earned in a given year, may be subject to, it's probably going to be subject to unrelated debt financed income tax. I hope that answers your question, Dwayne. If not, you might want to, you can always email me and or call me and we can talk about it more. I want to form an LLC using my and my spouse's Roth IRA money along with at least one other cash investor. Can I go ahead and form and fund it now so I will be ready to act when I find an investment property to buy? Sure. Actually, that's probably a pretty good idea because it does take some time to, and by time I'm talking about like, a couple weeks potentially to open an account, fund your account, establish the LLC and submitting the operating agreement to us for the LLC and then having us fund the LLC. All that can, particularly depending upon how long it takes your existing IRA or 401k provider to roll over or transfer the money to your account. That alone can sometimes take a couple weeks depending upon the custodian you're transferring from. So if you find a property and all of a sudden they want money down, et cetera, and you haven't even opened the account yet and you haven't even established the LLC, et cetera, now you got to tell them, well, I've got some stuff I need to do before I can give you the down payment. So yeah, you can certainly do that, and in a lot of ways it's probably a really good idea. Next question I've read online but hear varying answers. What's the best way to get started? Dollar amount minimum and how to pick the right investments. I was planning on getting a self-directed IRA for the purpose of buying, selling, flipping property. What are your thoughts on that? The best way to get started is to, in our case, I always encourage people to establish their account online through our portal. It's easy as can be. It won't take you more than 5 or 10 minutes to do it. It's just name, address, social security number, date of birth, answer a few questions, upload your ID, and boom, the account's open. We have no minimum dollar amount, so you can invest in whatever you want. How to pick the right investments? I can't answer that question for you. We're just providing administrative and custodial services for your account. How to pick the right investments? Do your due diligence. Talk with advisors. Talk with CPAs. Talk with people in your life. Do your research. And we have a lot of information on our website that provides information about different types of educational information about different types of alternative assets. If you have a specific investment type in mind, just read books, read online, go to classes, do whatever you need to do to educate yourself. And then the last part, I was planning on getting a self-directed IRA for the purpose of buying, selling, flipping property. What are your thoughts on that? That's a very popular type of investment strategy within self-directed IRAs. Those are my thoughts on it. If you feel like that's the best way to grow your retirement account and you feel comfortable doing it, you've educated yourself and you're confident that you can make some money doing that, then there's a lot of people that have done very well doing that. But you want to educate yourself, and that's incumbent upon you to do that, right? We're not here to educate. We do educate you. We provide information for you to access to be able to educate yourself, but ultimately it's up to you to take advantage of that. What are the pros and cons of doing a self-directed IRA for real estate? I heard that you can't deduct depreciation, which is a plus for tax purpose. Okay, I seem to get this question every time I talk about self-directed IRAs and real estate. So the reason why you can't deduct depreciation is because you're not personally receiving any income from the investment that you're making. The retirement account is receiving the investment, right? So if you own real estate outside your retirement account, at the end of the year, you're completing a report that gets submitted with your tax forms where you detail what your income was, what the rental income was, and what your expenses were, and then you end up with a net profit or loss, which then affects your adjusted gross income on your personal income tax. But when you're doing it inside a retirement account, the retirement account receives all the rental income. So there's nothing to report on your taxes. You personally aren't earning any income from the investment made inside the retirement account. The retirement account is receiving all of the income. So there is nothing to file. There's nothing to report. There's no form that gets completed, so there's nothing to depreciate against, right? The only reason you're depreciating that property is because it's an investment property that you're likely receiving rental income for, right? So in this case, it just doesn't apply. So what are the pros and cons of doing a self-directed IRA for real estate? The pros are that if you think real estate is the way that you want to grow your retirement account, if you think the real estate is going to offer better growth, better return on investment than any other investment you're considering making, particularly the stock market. It usually comes down to people are deciding, well, I could invest in real estate or I can invest in mutual funds and have it in the stock market. If you think real estate is a better investment than whatever other investment you might consider making, including mutual funds or the stock market, then that's the pro. If you think that the stock market or something else is going to grow your retirement account better than real estate, then that's the con. It really comes down to how do you want to grow your retirement account? What asset do you want to grow your retirement account? Do you think real estate's a good way to grow it? Then real estate's a good investment for you to make. What are the options for funding unanticipated property repairs improvements if remaining liquid funds in the IRA are insufficient for the cost of repairs improvements? Okay, so I kind of did answer this at the very beginning, but I'll mention it again. The options for funding are You can transfer or roll over additional money from any other retirement accounts that you might still hold outside of your Entrust self-directed account. You can make an annual contribution to your retirement account depending upon the type of account that you have, your income, and your age. You have to have earned income in order to make a contribution to a retirement account. Or, lastly, your IRA can borrow money. There are financial institutions that will loan your money, or your IRA can simply borrow from any non-disqualified third party. It doesn't have to be a formal financial institution. If you have somebody in your life that is not a disqualified person, that's someone other than you, your spouse, your parents, your children, etc., then they can loan money to your IRA. Now, you'd have to drop an actual formal promissory note. You have to drop an actual loan agreement, and it needs to be a non-recourse loan. But your IRA can borrow money from anybody who's willing to loan money to your IRA that's not a disqualified person. Next question, I would like to purchase a single-family home for rental purposes from my self-directed IRA. The purchase price is $480,000. I would like to take $280,000 from my IRA to purchase and put $200,000 cash in. Can I do this, and how would it work? Well, you're talking about partnering your IRA. I'm assuming when you say from my IRA and put $200,000 in cash in, just to be clear, the $280,000 from your IRA would also be cash. It would just be cash from your IRA. But if you're talking about $280, $280K from your IRA and $200,000 from your personal savings, then you are talking about partnering your IRA. So let me do a quick 28 divided by 48 is 58%. So your IRA would own 58 1/3% of the property, and you would own 41.67% personally, right? So on the purchase contract for that property, you would have the Entrust Group, FBO, your name and account number, as to an undivided interest, 58.33%, and then your name as to an undivided interest of 41.67%, right? Your IRA owns part of it, you own part of it, which means that any revenue generated by it comes 58 point whatever percent to your IRA, 41 point whatever percent to you. Any expenses have to be covered, 58 point whatever percent by your IRA, the rest covered by you, right? You have to stay consistent with the percentages established when you purchase the property. But essentially you're talking about having your IRA and yourself combined. You're allowed to do that. You're allowed to partner with yourself on a new investment. So although, typically you would be a disqualified person from doing business with your IRA, that's once the asset is already owning the IRA, or the IRA can't buy from or sell to a disqualified person. But you can partner with a disqualified person on a new investment, and that's what you're looking to do there, as I understand it. If I misunderstood your question, please, Ken, go ahead and you can ask another question or email or call me. Next question, 59.5, 62, or there is an age that withdraw is mandated. Do we leave asset to kids in the self-directed IRA or pay taxes on the duplex before? So at 59.5, if it's a pre-tax account like a traditional IRA or a SEP or a 401k, 59.5 is the age at which you can take a distribution and no longer be subject to a 10% penalty. 70.5 is the age for required minimum distributions. When you hit age 70.5, the IRS requires you to start taking a minimum distribution of your account. As to your next question, do we leave asset to kids in the self-directed IRA or pay taxes on the duplex before? That's up to you. You can name whoever you want as a beneficiary of your account. And at the time of your death, that entire retirement account will pass to whoever you name as beneficiaries. So if you have kids, you want to name them as beneficiaries, then the account and all the assets inside it would pass to those kids as the beneficiaries. Whether you want to take it as a distribution and pay taxes before that happens and then pass it to them as an asset outside the retirement account, again, it's up to you. In terms of estate management, and how you want to deal with that, we don't advise or help with that. You should talk to a tax advisor. I'm considering making payments to purchase property that is currently being built. Do I have to wait until I close to use the IRA, or can I make these payments, i.e. 10% at contracting, 10% at groundbreaking, 20% with roof on? Yeah, no, you don't have to wait until it closes. As a matter of fact, you can't wait until it closes. I mean, if you wait until it closes, then who's been making those payments all that time? because if you're making the payments personally out of your pocket, well, your IRA can no longer be involved in that transaction. So if you've started making these payments personally, and you want to now have your IRA take over the ownership of the property, then whoever you've been making those payments to have to pay you back. And then you have to redo the contract on the property, have it all be done in the IRA. But there's no reason if you want to use your IRA to buy property and you're going to be making payments over time for it till eventually it owns, that's fine. You can do it that way. There's nothing preventing you from doing that. Next question. I currently own real estate in my IRA. I am 70 and a half and I need to start taking RMD. The real estate continues to appreciate. My RMD will start increasing. Yep, that's true. At what point do I need to sell the investment to satisfy the RMD or pay the taxes and close the IRA? I mean, I don't know. At whatever point that comes for you, that you need to do that. Bear in mind, you can take a percentage of the property as an RMD, right? Like if you don't have the cash in the account, you can take a percentage of an asset as required minimum distribution as a distribution to you. So I mean, I can't really answer your question as far as at what point. At what point for you is not necessarily the same point for someone else. I mean, it's at whatever point that, again, I just have to refer like that type of question. You should be having that type of conversation with a CPA or tax advisor or some financial advisor, somebody like that in your life who gives advice. And as I mentioned more than once, Entrust does not provide advice. We just administer and custody self-directed retirement accounts. Okay, Jay, next question. Hi, Bill. This is Jay. Hi, Jay. I'd like to use my IRA account to purchase a condo, then rent it out with personal note to tenants. Please advise. I'm not sure what you mean by personal note to tenants. Your IRA can purchase a condo, and you can rent it out, and then those rent payments will get paid to your IRA. What you want to do, you're allowed to do. Again, I don't understand the personal note to tenants part. I'm not sure what exactly that means. But your IRA would own the condo. The IRA would receive the rent. The IRA would pay the bills. It's as simple as that. Can a self-directed IRA purchase stocks, bonds, ETFs, cryptocurrency? I mean, again, the term self-directed when it comes to IRAs just simply means that the custodian that you have the account with is willing to hold non-traditional assets, and they don't advise you. You make your own investment decisions. So can a self-directed IRA account purchase stocks, bonds, exchange-traded funds, cryptocurrency? Sure. As long as the custodian that you have the self-directed IRA with has a platform in place that allows you to invest in stocks, bonds. Cryptocurrency is a little more complicated. I mean, for us, if you want to invest in cryptocurrency inside your retirement account, you need to establish an LLC and then buy the cryptocurrency through that LLC. We don't have a platform or an ability to hold the key and the cold storage wallet that needs to be involved in holding cryptocurrency. Like we don't possess those. So you would need to establish an LLC, and then the LLC would purchase the cryptocurrency through whatever dealer, and then the LLC itself would hold possession of the wallet. And you can be the manager of the LLC. I mean, this comes down to doing a single-member LLC for checkbook control. Please don't reach out to me or check on our website. We have all kinds of information about doing single-member LLCs that gives you checkbook control. But that would be the way the cryptocurrency thing would have to work. James writes, are we taxed on gains in self-directed IRAs? No. I'll start with that. You have more questions. But you're taxed only when you take a distribution from your retirement account unless it's a Roth. Then it grows tax-free. But the gains in a self-directed IRA just go back to the IRA and grow the account. You only pay taxes on a retirement account. This isn't just self-directed. This is a general rule around retirement accounts. All IRAs, whether self-directed or not, have the same tax rules, which is that they're tax-deferred. A traditional SEP, simple 401k, beneficiary accounts are all tax deferred, which means at some point when you take a withdrawal from the account, you're going to pay taxes, income tax, on the amount that you get that you take as a withdrawal. There is no capital gains tax. It's taxed as income at the time you take a distribution. Roth IRAs grow tax-free. As long as you're over 59 and a half, had the account for at least 5 years, you don't ever have to pay taxes on the withdrawal. I heard that gains from LLPs and LCs are taxed via 990T, unrelated business taxable income. Okay, yes, there is something called UBTI, unrelated business income tax, unrelated business taxable income, that your IRA could be subject to tax if A, the investment is using leverage, is using borrowed money, or B, if you're considered to be running a business inside your retirement account. So you say gains from LLPs and LLCs, not necessarily from limited liability companies and limited partnerships, are not necessarily subject to UBIT, but they also might be. It depends upon how, if it's the LLC is simply a pass-through entity that's making investments, then no, it's not necessarily subject to that tax. But if the LLC is using leverage, then yes, it would probably be subject to UBIT. If it's the LLC is a business that let's say you set up a franchise or you're running a franchise through your IRA, then that's probably going to be subject to UBIT. But if you make an investment in a business, then you're not necessarily going to be subject to UBIT. It could be, again, you would want to talk to a CPA about whether an investment you make is going to be subject to UBIT or not. Or the investment, the LLC or LP, managers, you want to talk to them about how are they going to be making investments? Are they going to be using leverage to determine whether your account might be subject to UBIT? And when it is subject to UBIT, that's just an expense, right? Like if you're going to get a 20% return on investment and you have to pay UBIT that's going to lower that by I don't know, 5%, it's still a 15% return. That 5% is just an expense. Hope that made sense. What type of investment vehicles are available in a self-directed IRA? Like what type of assets can you invest in? Pretty much anything you want, except for collectibles, life insurance, and S corporation. Anything else you can invest in as long as it's for investment purposes. Do you do self-directed 401k and compare it to an IRA? We have an individual 401k that you can establish with us that you can then self-direct into non-traditional assets, yes. Ours is an individual 401k, or you might hear the term solo 401k, which means it's only available for business owners, their spouses, and their partners. If you are a business owner that has employees, then you are not eligible for our individual 401k. How is a 401k different from an IRA? Well, a 401k is a qualified plan versus an IRA. Contribution limits are different. How you can make contributions, how you can get to the maximum contribution is a little easier in a 401k. You can borrow you can borrow up to $50,000 from your 401k. You can't borrow from an IRA. But really what's most important is with the 401k, you have to be like an independent contractor or have your own business. And you have to earn income from that business, right? It can't be it can't be a business that's generating passive income such as rental income or something like that. That's not considered a business that qualifies for a 401k. Larry, if you want to find out more about that, email me. I can send you documents on our 401k plan. For promissory notes and tax liens, does Entrust or the individual locate the actual investments? You do. Entrust does not locate investments for you. You have to do that work yourself. Sam asks, can you transfer from 401k to self-directed IRA, or does it have to be a rollover? It has to be a rollover. 401ks to IRAs have to be processed as rollovers. You can't do a 401k to IRA transfer. What type of assets, i.e. stocks, bonds, mutual funds, ETFs, can be transferred from IRA to self-directed IRA? Well, from our standpoint, you wouldn't transfer the assets. You would liquidate the assets and transfer cash and then use the cash to invest in whatever you want to invest in. From a standpoint of most self-directed custodians, you wouldn't find financially how we charge versus how typical brokerage firms charge. It really doesn't make a lot of sense to hold publicly traded stocks, bonds, mutual funds with a self-directed custodian, to be honest with you. I mean, if you're just going to invest in the publicly traded stocks, bonds, mutual funds, et cetera, you're better off just having an account with an online brokerage firm like E-Trade or Scottrade or somebody like that. I mean, it's going to be a lot cheaper, to be honest with you, and their platform is probably better. But most people who have an account with us, they want to invest in real estate or precious metals or private placements or some alternative assets, and so they liquidate whatever holdings, whatever stocks, ETFs, and then transfer cash to us, and then they use the cash inside the retirement account to make the investment that they want to make. David asks, can a sister live in a property? Yes, she can. A sister is not considered a disqualified person. Siblings are not disqualified persons. They are. Ancestors, your spouse, your ancestors, your lineal descendants. So parents, grandparents, children, grandchildren. Siblings, aunts, uncles, cousins, nieces, nephews, they are not considered disqualified persons. If you take money out of your IRA, dividends, etc., do you pay penalty below 59.5 or just taxes? You have to pay a 10% penalty on top of the taxes. Next question, can I rent a home to my son and his family? No. A son is a disqualified person. In my loan agreement, it says that the loan amount is $50,000 and the interest is 4% and the period is 5 years. Now, if I paid the whole loan in 1 year, do I pay interest for 1 year or 5 years? That depends upon the loan agreement. I mean, that's not, I'm sorry, that's not really a self-directed IRA question. You would have to talk to, I'm assuming you're the borrower, you need to talk to the lender. Is an IRA LLC required to pay income and or capital gains tax? No capital gains tax, no. And an IRA, so an LLC that's owned by your IRA is considered what's the term? Damn it, I just said it earlier today. I can't remember, but no, your IRA shouldn't be required, your LLC would not be required to pay any tax if it's owned by an IRA. The IRA might be required to pay UBIT or UDFI depending upon how you're utilizing that LLC. But the LLC itself shouldn't be required to pay any taxes. But that would be a question you really want to talk to a CPA about. Disregarded entity. An LLC owned by the IRA is considered a disregarded entity, so therefore it's usually not subject to that tax. I can't think of any scenario where an IRA, the LLC itself, would be required to pay tax. But the LLC might not be, but the IRA might if you're using leverage or if you're running a business, right? Then you've got UBIT, UDFI that you have to deal with. Can the SD be a hard money and private funding? Can the, I feel stupid, but I'm not sure what you mean by, can the self-directed be a hard, no, I don't think that's it. Sorry, Kerrigan, I don't understand the question. You're going to have to expand on that a little bit. If I took a loan from my solo 401k and one time paid $9,500 to pay back the loan faster, and when I paid the money, the bank charged me a deposit fee of $1,950 after a week from the account. Now my question is, how much did I pay to the loan? $9,500 or $94,000? I believe that, sorry, I don't mean to laugh. How much did I pay to the loan? $9,500 or $94,080.5. My impression is that you paid $9,500 of a loan and then you paid a $19.50 fee. So, I mean, I think your question was answered in the question that you asked me. What do I put on the Entrust form to transfer funds into an LLC? Well, you're not. So you're making an investment. Your IRA is purchasing that LLC, right? So if you're, well, okay, let me rephrase. Yeah, so your IRA is becoming a member of that LLC or becoming a part owner of that LLC or maybe 100% owner in that LLC. So we have a form called a bidirectional letter that you need to complete where you would list the name of the LLC, how much are you transferring into that LLC, and what percentage ownership your IRA is going to have in that LLC. So that's the form that you need to complete. It's the bidirectional letter, and then instruct us, how much you want to invest, what the percentage ownership is going to be, and what the name of the LLC is that you want us to invest in. So your IRA is investing in the LLC, right? It's not just transferring funds. It's purchasing shares of ownership into that LLC. Next question, what are the plan characteristics in Form 5500EZ if I have a solo 401k plan from the Entrust Group? I'm not sure what you mean by plan characteristics. I'm sorry. I've never filled out a Form 5500EZ, so I don't know what the answer to that question is. Sorry. Amar, if you want to maybe expand on that or send it to me in email. I mean, I can send you a document about our 401k plan that might answer your question. Marty asks, what does Entrust charge and what service does it provide for that amount? All of our fees are on our website. I encourage you to just go to the entrustgroup.com. Right at the top you'll see fees, and click on there and it details all of our fees. What do we provide? We provide all the administrative and custodial services for your retirement account. Karen asks, please explain in detail what does total plan liabilities mean in Form 5500EZ? Don't know. Never filled one out. Another question about the Form 5500EZ. I'm not going to be able to answer this question. Karen, you need to talk to a CPA. Laura asks, if I am a real estate agent, then can I sell a property in my self-directed IRA? So that's a good question. If you go to our website, and we have some frequently asked questions about doing different types of investments inside a retirement account, and that's one of the FAQs that we have on there. And our answer to the question is, don't earn a commission. If you're using your own IRA, you're using your own IRA to purchase a property, then we say that you can do it, but don't earn any commission on it, right? That would be considered a prohibited transaction. Personally, I'm of the opinion that you shouldn't even be the agent on it. There is wording in the Internal Revenue Code in Section 4975 that determines that a disqualified person, and the exact wording is, providing services to the plan would be considered prohibited. And so it could be interpreted that you as an agent acting as the agent on behalf of your IRA to purchase that property are providing a service to your IRA. So from my standpoint, I encourage people who are real estate agents to not be the agent on record on that transaction, that you have a friend do it. And then same person, is it okay to invest myself in options and futures? I don't know what you mean by is it okay. Your IRA is allowed to invest in options and futures, as are you. So sure, it's okay if you want to. Can I invest in an LLC for which I am managing member? It depends. It depends upon how much ownership you have in the LLC. It depends upon whether you are being paid any kind of income to be the managing member. So if your IRA is going to invest in an LLC and you're managing the member, I can tell you that you can't receive any kind of compensation for being the managing member. As far as whether your IRA can make an investment in that LLC, it depends upon your percentage membership, your percentage ownership. As a managing member, I'm going to tell you that if your ownership in that LLC, your personal ownership is greater than 10%, we would probably not process that transaction without some kind of documentation from a CPA or financial advisor or attorney, tax attorney, stating that they have reviewed the transaction and then determined that it is not a prohibited transaction per Section 4975 of the Internal Revenue Code. But if you have less than 10% ownership, yeah, you could probably use your IRA to invest in it. But like I said, if you're receiving compensation as a manager, you're probably going to want to remove that compensation piece from the operating agreement. Okay, Dwayne, can an IRA beneficiary borrow from a self-directed IRA similar to many employee-sponsored 401k plans? No. An IRA, an individual can't borrow from an IRA. You can only borrow from a 401k. Sam asks, I own a piece of land. Can I use a self-directed IRA to build a house or cottage on it? No. If you own a piece of land, your IRA can't build on it. Your IRA would have to own the land in order for the IRA to build on it. In this case, the new construction will be owned by the IRA, but the land by me is accepted. Sorry, Sam, no, that's not allowed. Your IRA, like I said, your IRA would have to own the land in order to build on it. Same way, if your IRA owned the land, you personally couldn't borrow it, build on it. If you own the land, you have to build on it. Or whoever else wants to build on it, but it can't be your IRA or the IRA of any other disqualified person. Peter asks, if I invest in a self-directed IRA investment property, can I still write off repair and other expenses on my taxes? How would you do that? How would you write that off? Like, what are you writing that off against? in order to write off repair and other expenses, you have to claim the income on your income taxes, right? And so the income is going back directly to your retirement account, so there's nothing to write it off against. So no, the answer is no. Jesse says, hi Bill, I am already a client of Entrust. Thanks for your business. I have a question about the quarterly, yearly maintenance fees. In my case, the fees are approximately $300 a year. I don't remember if these fees are per unit. That is, if I purchase twice as much as the minimal investment, would I then be charged approximately $600 a year? Well, so I'm guessing that you have our flat per asset fee, which is $299 a year, which is actually $74.75 a quarter. Adds up to $299 a year. And so if you're on the flat per asset fee and you purchase the second asset, then yes, that would double to now $598 a year. But depending upon the dollar amount, you could also choose our fee option based on the value of the account. You could switch to that, and it might be a little less than that, but it depends upon how much you're investing. But yeah, one of our annual fee options is a flat per asset fee. The other one is a fee based on the value of the account. Marita asks, can a lump sum be paid to a non-related company who will manage the repairs so small individual checks don't have to be requested? That's a great question. It's kind of how I use my, so I have a couple properties in my IRA. For those who have joined more webinars that I've done, I've used this example more than once. I have a property manager who receives the rent income and keeps it in an account for me, and then I just send them the bills, and then they pay the bills. So the answer to your question is yes. You would, the non-related company would have to submit some kind of invoice for the money that's being sent out, right? So if you wanted a lump sum be paid to a non-related company, like let's say it's $1,000, for example, well, that non-related company would have to submit some kind of document, that we can keep on file, so that when in the event we get audited and they want to know why we sent $1,000 to this company, we have documentation supporting that, right? So you would have to create some kind of invoice, even if that invoice read, for future invoices or something like that. But you would have to submit some document to us that we could then write the check to the non-related company. But in short, the answer is yes, you could do that. Tom asks, can you discuss UBIT, in particular for investment in commercial real estate? I joined meeting a bit late, so ignore this if already discussed. No, Tom, I'll already go ahead and answer it. And I did discuss it, but unrelated business income tax is applied to a retirement account if it is considered that essentially the IRS or the IRA is running a business, right? That's generating earned income. So it depends upon, and then unrelated debt finance income tax, which is sort of the opposite side of the same coin, is implied if your IRA or the entity that you're invested in is using leverage, is using borrowed money. Right? So your IRA may or may not be subject to UBIT, UDFI, depending upon how the transaction is. But it would need to be in commercial, for investment in commercial real estate. If the commercial real estate is also borrowing money, then you're likely going to be subject to UDFI. Right? So if you invest in an LLC that's investing in commercial real estate, and that LLC borrowed, I don't know, however much money that was needed to borrow, like let's say 50% of the total amount was borrowed, then your account is likely going to be subject to some amount of unrelated business income tax. Tom, if you want more information on that, please email me and I can send you a document on UBIT, UDFI that we put together. Or if you go to our website, I think we have some articles and things like that about it there. Andrew writes, if hypothetically I mowed the lawn of my investment property, prohibited action of working on property, how would anyone know? I literally have gotten this question at presentations that I've done more than once. So how would somebody, you want a scenario on how somebody would know? Let's say then your neighbor knows that you own your property inside an IRA, and for whatever reason the neighbor decides that they don't like you very much and they rat you out. So that's potentially one way that someone would know. Now, would the IRS really give, would they really care? I don't know. But technically, mowing the lawn is a prohibited transaction. And, how would somebody know? Somebody would have to tell on you, I think. Hi, I just joined the meeting. Can I open a self-directed IRA, move funds from 2 different financial advisors, and then invest in real estate and maintain corporate bonds as is? I don't understand what the maintain corporate bonds as is part of that. Can you open a self-directed IRA, move funds from 2 different financial institutions, and then invest in real estate? I'm going to stop right there and say yes, you can do all that. And maintain corporate bonds as is, I don't understand that part of it. I don't know how that comes into play. So you might need to explain that to me in a phone call or email so that I can properly answer that question. But everything else up to the and maintain corporate bonds as is, I say unequivocally yes, you can do that. Marita Das, do you allow a Roth conversion if I move a small existing Roth to you and a larger IRA to convert? Absolutely. Just be aware of the tax consequences of that. Talk to a CPA so that you know what kind of tax hit you're going to get. Next question from Brody. Can I form a California LLC and open a bank account at a bank of my choice into which I would roll my decedent IRA proceeds? Yes. That is exactly how an LLC inside your IRA would work. You open the bank account. You tell us to so you're not rolling it into in which I roll my decedent IRA proceeds. Yes. So your decedent IRA would become the owner of that LLC. So you're not just rolling it into there. Your IRA is purchasing the ownership of that LLC. So it becomes an investment into that LLC. Follow-up question. I assume the sole member of this LLC would be my self-directed IRA that I established with Entrust. That is correct. Then Brody again, when I am prepared to make a loan based on the above, could I then write a check directly to the loan escrow? I'm going to start this again. When I am prepared to make a loan based on the above, could I then write a check directly to the loan escrow with no involvement or approval required from Entrust? Yes. That is exactly how a single member LLC works. It gives you checkbook control. So individual transactions done inside the retirement account, individual transactions done inside the LLC are done by the manager of that LLC, which in this case I'm guessing is going to be you. And yes, you don't need to involve Entrust that. Once Entrust funds your LLC, it's up to you to do the transactions within that LLC, and Entrust does not need to be involved specifically in those day-to-day transactions. Eventually the money would have to flow back to your IRA, but on those individual transactions done inside the LLC, Entrust is not involved. So he says that is my retirement funds would go directly from the financial institution I select to hold, then to the loan escrow I establish for each loan I originate. That is correct. That's exactly how it would work. So continuing, assuming all of the above works, I've reviewed your fee disclosure. I understand it correctly. If I understand it, my choice would be to pay Entrust either an annual fee of $1,995, assuming my LLC is $300,000 or more assets, or a fee of $299 for each outstanding loan transaction per year of my LLC. No, you don't understand that correctly. The $299 per year would be for the LLC itself. The LLC can hold as many different loans as you want, but inside your retirement account you have one asset, the LLC itself. So by utilizing the LLC, you now have one asset inside the account, the LLC, and so you would pay us $299 a year. Then following up, am I correct that assuming I choose to form an LLC, that the only other fee to Entrust would be the $50 fee to establish the Entrust self-directed IRA? You would have a $50. You did a backdoor way of getting me to talk about fees here, Brody. $50 fee to establish the account, a $95 one-time transaction fee to process the investment into the LLC, then $74.75 a quarter to hold the LLC as an asset inside your account. Again, the LLC can do 100 different promissory notes, but inside your IRA you've got one asset, the LLC. Again, $50 account establishment fee, $95 one-time transaction fee to process the investment in the LLC, $74.75 a quarter for as long as you have the LLC in the account, which adds up to $299 a year. Continuing, I understand that any brokerage fees I charge are taxable and could not be paid into by self-directed IRA account. However, is it correct that all the interest on the LLC assets could stay in the IRA account and the income thereon be tax deferred until I choose or I'm required at age 70 to take proceeds out of my account as taxable distributions? So any brokerage fees that you charge are taxable and could not be paid into the self-directed IRA account. So first of all, the only charges that you're allowed to charge by doing these transactions within the LLC owned by your IRA are income that has to go back into the LLC and paid to the IRA. So when you talk about brokerage fees that you charge, you're not allowed to personally charge brokerage fees that are paid to you based on investments done by your IRA. So I'm gonna just say if you're charging brokerage fees, those brokerage fees have to go back to the LLC and therefore back into the IRA. Right? And then the last part is to correct that all the interest on the LLC assets could stay in the IRA account. Not only can they must. Right? I mean, unless you want to take it out as a distribution, but any investment that you do in that LLC, any loans that you do that are through that LLC that's owned by the IRA, all have to pay back to the LLC and then from the LLC back to the IRA. They must. There's no option on that. And again, that includes brokerage fees. Then Brody has one final part to this. His group of questions, I am required to take mandatory minimum distributions, required minimum distributions from the current decedent IRA account and assume this obligation would continue with the self-directed IRA account. You assume correctly. That is true. Would Entrust assist in the calculation of these annual distributions each year? Yes, we will. I assume that I would write them to myself directly from the LLC bank account without any additional fees from Entrust. That is incorrect. Your distributions from your retirement account have to come from the IRA. You request the distribution and we send it to you from the IRA. If you write a check to yourself from your LLC, you are creating a prohibited transaction and putting your entire IRA at risk. Any money to you must come from the IRA. It cannot come from the LLC. You can never write a check from the LLC to yourself. Right? You're not allowed to pay expenses out of pocket and have the LLC reimburse you. You're not allowed to pay yourself from the LLC. You're just simply not allowed to ever write a check from the LLC to you, from the LLC to you or any other disqualified person. I hope that's clear. Marita writes, what rate is the unrelated debt finance tax calculated? It's at trust rates. There's a table for it. It starts at, I don't know if they amended these rates with the new 2018 tax codes, but if you look up trust tax rates, you will find them, or honestly look up unrelated business income tax rates, and I'm sure there's a table there. Or, boy, a lot of UBIT questions. Or email me, and we have a document that has the table on there. Dennis, can you co-own property, i.e. 50% self-directed IRA and 50% individual? You absolutely can, but that relationship, that 50% partnership has to be established at the time of purchase of a new asset. Shelley writes, can I pay for forming LLC to obtain checkbook controller? Does fee have to be paid by IRA? This is a really good question, and the reason why it's such a good question is because I have always, or for a long time, I was telling people and work off the understanding and expectation that if you're going to have an IRA own your LLC, then the fees to form the LLC must be paid by the IRA up front. I had a conversation with our compliance manager, this was at some point last year, around this, like, what's the best way logistically to handle that? They want to set up the LLC, but the IRA has to pay. So he is of the opinion that the LLC has no ownership until it's formed. So therefore, the fee to form the LLC, the upfront fee to form the LLC, can be paid by anybody because there is no LLC until it's formed, and then you establish the IRA as the owner of the LLC, and now the IRA is responsible for the fees. Right? So if there's an upfront fee that needs to be paid to create the LLC, then you can pay that out of pocket because your IRA does not yet own that LLC. Does that make sense? I'm going to assume that makes sense. Francis writes, what is your fee structure? I please encourage you to go to our website, and at the very top, theentrustgroup.com, click on fees. Right at the top, you'll see it next to our open an account button, and it's all very clearly detailed there. Lisa writes, just a question about funding. Does a self-directed always start with a rollover transfer, can accept a contribution like a SEP? Sure, you can do a contribution. They often start with a rollover transfer, but it doesn't have to. You can make an annual contribution. Marita again asks, can you explain again how to utilize an LLC in conjunction with an IRA? Sure. You establish an IRA with Entrust. So now you have an account number. So the name of your retirement account would now be, for any investments you want to make, would be the Entrust Group FBO, which stands for benefit of. The Entrust Group FBO, your name, IRA number, and then your 10-digit account number, your Entrust 10-digit account number. So in my case, the Entrust Group FBO, Bill Neville, IRA number 72300, blah, 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 blah. Most of our accounts start off 72300. Once you have that established, now you can go and you can establish the LLC, and you then you're going to need to create an operating agreement, and you need to name in the operating agreement, you're going to name the member or owner of that LLC. The member is going to be the Entrust Group, FBO, Bill Neville, IRA number 72300, blah, 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 right? So that becomes the entity, the name of the owner member of the LLC. You then instruct us to fund that LLC. So we have a form called a bidirectional letter that you complete with the name of the LLC, how much you want us to fund, and then you tell us where to send that money. Now, we can make out a check made out to the LLC, to ABC LLC, whatever you call it, that we can send to you, and then you can take that check to a bank and establish a bank account under the LLC, or you can establish a bank account under the LLC and have us wire the money directly to that LLC. Now you have an LLC that is owned and funded by your IRA. You can name yourself as manager of that LLC, as long as you don't have anything there that says that you're going to receive any kind of compensation or expense reimbursement or any kind of remuneration to be the manager of the LLC. But as manager, it gives you the ability to write the checks, to open the checking account, open the bank account, write the checks, and to make investment decisions, right? So that's how it works. German writes, can you talk about costs and fees of this IRA, percentage of total or transaction? I could, but I'm not going to. Go to our website, theentrustgroup.com, click on fees, and read it all there. It's very clearly laid out. Is there any unrelated business taxable income tax due on this account? What account? I don't know, David, if you didn't complete your question, but that's not enough for me to be able to answer your question. Jesse writes, when my self-directed investment is completed and it is not time yet for me to receive distributions, what options do I have? And so it's completely, well, and then follows up, leave the funds with Entrust and then get distributions from Entrust, or do I roll over again to my regular 401k brokerage? Both of those are options. You can continue to leave the money with Entrust and either find another alternative investment that you want to make. You can take a distribution from it. You can leave with Entrust and take distributions, or you can transfer it, roll over to a different custodian. All of those are options. It's whatever you choose to do. Thomas asks, can a VEBA, V-E-B-A account, Volunteer Employee Beneficiary Association, designed to cover only qualified health costs, be converted into a self-directed IRA? You know, I don't know anything about those volunteer. I'm guessing probably not. Because health savings account, it sounds similar to a health savings account, and I know that a health savings account cannot be converted to a self-directed IRA, but from a standpoint of a health savings account, if you don't use it for health expenses, then it's treated like an IRA. So any distribution that's not used for health care expenses is just taxed like an IRA is. It's tax deferred. So a Volunteer Employee Beneficiary Association account that's qualified health costs sounds like a health savings account. Maybe it can be transferred to a self-directed health savings account. We have a health HSA that you can self-direct, so I would find out from your or do maybe Google and see if that can transfer to a HSA. I'm thinking that there's a good chance that it probably could, because HSAs are for qualified. But I don't know, VEBA, like HSAs, for an to have an HSA, you have to have a high deductible health care plan. So I don't know if that VEBA works the same way. Please draw a picture how to use real estate assets after 59.5. Thank you. However you want to grow the account. Again, I'm not really entirely sure how to answer this question. I mean, the only thing that happens at 59.5 is you're no longer subject to 10% penalty for any distribution. So after 59.5 is the same as before 59.5. You want to try and grow your retirement account, find an investment you want to make, and invest in it. Ken asks, if I purchase rental property with my IRA, can I rent or lease it to my son? No, sorry, your son is a disqualified person. Michael writes, Canadian question, is Entrust required to notify IRS or anyone else of distributions in excess of $10,000 other than tax purposes. So I forget what part of the rules that falls under in terms of I forget what that's called. I actually don't know the answer to this. I don't know if we're required to notify the I mean, honestly, well, actually I do know the answer to this. Anybody takes a distribution from their retirement account, we notify the IRS through a Form 1099-R. So, I mean, I guess the answer to that is yes. Do we do any kind of special filing other than that? No, I don't think so. I mean, anytime anybody takes a distribution from a retirement account, the custodian of the retirement account is going to send you and the IRS a 1099-R informing you and the IRS that you took a distribution from the retirement account. And then the IRS taxes you. Kerrigan asks, can a self-directed IRA be a hard money lender and do private loans? Yeah, absolutely. We have a lot of people who do that. Michael asks, I want to buy and sell notes in my IRA. The note business is in an LLC, but the note investments will be in the IRA or a checkbook LLC. I want to use the IRA to pay most of the individual notes-related expenses, similar to paying for a passive turnkey rental property expenses, and use the LLC to pay for the business expenses. How do I educate myself on how to be compliant and understand the nuances and or risks of using this model in the IRS's eyes? The note business is in an LLC, but the note investments will be in the IRA or a checkbook LLC. That part right there I don't understand. I don't know how you're going to pull that off. I want to use the IRA to pay most of the individual notes related expenses, similar to paying for a pass-through, and use the LLC to pay for the business expenses. I don't think you can do what you want to do. How do you educate yourself? A lot of information on our website. You can call us and we can have a conversation about it. Call me or call somebody in our company. We can talk about it. Yeah, I don't. The way you write this makes me question. I have questions as to whether what you want to do is prohibited. I kind of feel like the way you're wanting to structure this is probably prohibited. But you could also, honestly, the last sort of action that you can take if you want to go straight to the horse's mouth, request a private letter ruling from the Department of Labor. Department of Labor oversees retirement accounts, and they will, not a private letter ruling, an advisory opinion. There's no cost to get an advisory opinion from the Department of Labor. You could always reach out to them and get an advisory opinion. Michael asked, I'm sorry, the first Michael, I've got two Michaels here. If that didn't help you very much, then I do encourage you to give me a call and we can talk about it. Michael Smith asked, does Entrust facilitate selling stocks within a self-directed IRA and convert to cash value with which to invest in approved assets? So in terms of facilitate, I mean, when you transfer from an existing retirement account, you will fill out a transfer form and send it to us. And one of those, if you're going to do your whole entire account, one of the options is liquidate and transfer the funds. That's a box that you'll check and we send to your current custodian. Unfortunately, your current custodian might not necessarily follow the liquidate part of the instructions, and then because you don't have cash available, won't process it. So we don't request that your current custodian liquidate on behalf of your IRA. So if you want to have a self-directed IRA, we always tell people you should contact your custodian to tell them what stocks and mutual funds you want to cash out. Difference between a Roth IRA and a Roth 401k. Well, an IRA is first of all, an IRA only allows contributions. A Roth IRA of $5,500 or $6,500 if you're 50 or older. 401k can allow you to be up to contribute up to $55,000 as the employee and the employer. The other difference is anybody with earned income can establish a Roth IRA, but to have a 401k, you need to have your own business or be an independent contractor. So IRAs in general, 401ks have differences. Those are the main differences. Jesse writes, final question, at the end of a calendar year, my self-directed account must be valued, right? I can't recall the exact IRS term for this at the moment. It's fair market value. Does Entrust provide this service? No, we don't value the asset for you. We actually request that you value the asset for us. But I mean, depending upon the type of asset that it is, like if it's real estate, that can be simply as simple as having a realtor run comps and sign off on our fair market valuation form. So it doesn't have to be a formal appraisal. But the IRS requires us to report a fair market value to them on an annual basis through Form 5498. We are always going to report a fair market value. It's up to you to update us with the most recent current fair market value. If you don't update us, then we are going to report the same fair market value we showed the previous year. But we will, all custodians, not just Entrust, Fidelity, Charles Schwab, everybody is reporting fair market value of your account to the IRS. The difference between us and them is the fair market value can easily be taken from publicly traded information, right? Publicly traded mutual funds that updates on a daily basis. But real estate, private placements, things like that, we rely on our account holders to update us with the fair market value. Rich writes, to clarify, please draw a picture of how to personally or for decedents use real estate owned by my IRA. How to personally use real estate owned by my IRA. I mean, you'd have to take it as a distribution if you want to use it personally. I mean, you can use it for investment purposes from a standpoint that you can use it to grow your retirement account. But if you want to personally use it from a standpoint of using it as a vacation home or a second home or staying it, there is no way to do that while it's held inside the retirement account. The only thing to do is take it out as a distribution. James writes, I want to buy an investment property using funds from my Roth. As part of the purchase, I will be buying subject to the seller's existing non-recourse mortgage note on the property. Okay. That note will remain in the seller's name, but my Roth will make the payments on that note directly to the lender until my Roth resells the property. Would that note be treated as if my Roth borrowed money to buy the property? Boy, that's a good question that I'm afraid I don't know the answer to right offhand. James, yeah, good question. I don't have an answer for you. I'm sorry. Maybe send that to me in an email, and I'll have to check in with it. I might need to get some clarification, and I might have to check in with our compliance person because I actually don't know the answer to that. I'm sorry. And the last question that we have currently, and it's a long one. I have a solo 401k plan from Entrust. Thanks for your business. There's nobody in the plan except me now in my loan agreement that I made by myself. It says that the loan amount is $50,000 and the interest is 4% and the period is 5 years. Now I paid the whole loan in 1 year. Now my question is, do I pay interest for 1 year or 5 years? You answer the question telling me to ask my lender, but myself is the borrower and the lender, and I want to know how much interest should I pay if I pay back the loan in 1 year. Should I pay interest in the $50,000 for 1 year? Or should I pay interest on the $50,000 for 5 years, even if I paid the loan in 1 year? I would expect that you would pay the loan, you would pay the interest for the 1 year. But I haven't reviewed in detail our actual loan, like the loan document that sort of comes with our plan. And I would think that that might be detailed in the loan document. It also might to some extent be, I would expect that you would have to pay, you just have to pay the percentage based on the amount of time that you had the loan back. I think to be safe, that would be the percentage you would pay is just what to do based on, yeah. You had it for 1 year, pay the interest for 1 year. That's going to be my final answer. Okay, that was it, everybody. An hour and a half, not so bad. As always, we appreciate you having us on here. Please join us next month. I'm not sure. We're having some debate as far as what the topic's going to be next month. So we'll get that announcement as soon as possible. Again, thanks for joining. Everybody have a good rest of your day. Thanks. Bye.